What is up, YouTube? It is Matt back with another crypto video, and today's video is on Ripple XRP. This first article I have for you today out of the Daily Hodl, it is confirmed Ripple now has 7 partners ready to use XRP-powered payment solution xRapid. And while we tend to get excited about positive news coming out about our currencies that we are investing in, it's always important to kind of see the flip side of that. And that's what this second article here, Ripple and XRP, and why we may need to proceed with caution. And this is out of the Seeking Alpha. I will end this video with this last article here out of the CoinDesk, where Walmart tells produce suppliers to use blockchain by next September. And this is very positive news for the adoption of blockchain technology into everyday life. So, as always, if you enjoyed this video, hit the subscribe button, like it, share it, leave a comment, and let's get right to it. So this first article, Ripple now has 7 partners ready to use the XRP-powered payment solution xRapid. The number of companies ready to fully implement Ripple's XRP-powered payment product, xRapid, is growing. Ripple created xRapid to give financial institutions a real-time settlement solution that utilizes XRP to increase the speed and liquidity of cross-border payments. Chris Larson, one of Ripple's co-founders, recently described exactly how the technology can be utilized, using a cross-border payment from US to Mexico as an example. So 7 Ripple partners ready to use xRapid. Crypto exchanges Bittrex, Bitso, and Coins.ph are the latest partners that will use xRapid to send instant cross-border payments with low fees. London-based Mercury FX is also on board, after recently completing a pilot test and calling the raw speed of xRapid unbelievable. And this is their tweet here. In Q1, along with other xRapid pilot customers, we have proved that xRapid can lower liquidity costs and increase payment speeds and transparency using XRP. We are looking forward to continued successful testing and going into production. So SBI's new crypto exchange, the SBI Virtual Currencies, is also planning on joining xRapid to help financial institutions send cross-border payments. Cuallix, a company that operates in the US, Mexico, and Hong Kong and offers the unbanked a way to make international payments, is also preparing to go into production. Last but not least, the Canadian cross-border payments company Remit, a long-term backer of XRP, is on board as well. In addition to these 7 companies above, a number of additional companies are officially piloting xRapid, including IDT Corporation, MoneyGram, and Cambridge Global Payments. Western Union recently announced that its pilot of xRapid did not save the company time or money. Ripple says the results show smaller financial institutions and startups are more likely to initially see significant savings with the technology. And Sagar Sarbai, Ripple's head of regulatory relations in the Asia Pacific and the Middle East, recently said the company is gearing up for xRapid's official launch in about 1 month. Certainly, we will see. I know the Swell conference is coming up in about the same time frame, so maybe, who knows, maybe Bill Clinton, the key speaker there, might announce that it's going live. Who knows? We will see. So this second article here, Ripple and XRP and why we may need to proceed with caution. So recent developments. Let's just get this out of the way. Recently, Ripple has passed Ethereum in market cap, although it may have been short-lived. My spidey senses are telling me we are about to get bombarded with XRP to the moon articles. So I wanted to provide some more in-depth information for the rest of you who I hope can and will appreciate a different approach. Before we get into Ripple's history, the reason why Ripple might be worth investing in, and the concerns I have, I want to talk about market cap for a minute. So market cap is deceptive. One of the most popular sites in the crypto universe is coinmarketcap.com. This site lists the largest number of cryptocurrencies and is probably one of the most referenced source of crypto data. However, there are some things you should understand about what market cap means in relation to cryptocurrencies and about CoinMarketCap itself. The textbook definition of market cap is simply the number of shares a company has, or the number of shares of a company multiplied by the share price. With cryptocurrencies, there are no shares, and since there may not be a company at all, so we use the number of coins that are in the circulating supply times the price of each single coin. So what does circulating mean? Now this is where it gets tricky, because it turns out that this means something slightly different for each cryptocurrency. As a result, This type of comparison is fraught with peril. Let's look at just 3 different cryptocurrencies: Bitcoin, Ripple, and Tether. For Bitcoin, it means the number of Bitcoin that have been mined to date. This number changes every 10 minutes on average as more Bitcoin are mined. There is a hard cap of 21 million Bitcoin in the year 2140. For Ripple, it means the total supply of XRP that is not locked up. 100 billion XRP were created at the launch, of which 80 billion were given to the company and 20 billion were given to the founders. As XRP are released from the founders or the company, they enter the circulating amount. So at any point when they release XRP, they change the circulating supply. So for Tether, this means, if you believe them, the amount of US dollars they have in the bank to cover the value of each Tether coin. As the amount in their bank account goes up, more Tether is issued to kind of balance it out and keep it worth $1. Already, after examining only 3 of the top 10 cryptocurrencies, you can see that the definition of the circulating supply can vary greatly. So now let's talk about the price. After all, the market cap is the price times the circulating supply. So where does the price come from? The price is determined by taking the value across exchanges and essentially creating a weighted average. However, this is also a challenge because not all exchanges are created equal. Some exchanges operate under regulation and others do not. Some exchanges follow the Know Your Customer and AML compliances and others do not. Some allow margin trading even without any formal documentation and others do not. Some allow free trading, which means you can trade with yourself even if you hold a single Bitcoin and conduct $1 billion worth of trading volume if you want to, just by trading with yourself. Why not, you know? So the price you pay for a cryptocurrency is determined by the price on the exchange that you use and the currency that the transaction took place. So this means that if you bought XRP with Ethereum and you want the price in US dollars, there's a lot going on under the hood. And recall that not all sources of data are reliable or regulated. If this transaction took place on an exchange that does not differentiate between US dollars and Tether, it's a much bigger mess. So CoinMarketCap does attempt to identify and remove some of the shady activity from their aggregation. You may notice the little asterisk symbols by the name of certain exchanges, meaning that shady activity has caused them to exclude them from the weighted price. But I seriously doubt that they are 100% effective in this undertaking. So long story short, be careful about the market cap figure in cryptocurrencies. It may be of interest for one particular coin, but it's very hard to compare coins using this method because of the huge operational differences, the definition of their own circulating supply, and the price discovery issues that I have described. So, a brief history of Ripple. In conversation, you'll hear people talking about Ripple and XRP as if they were the same thing. However, Ripple is actually a company, and XRP is the token, is just one of their products. Ripple actually got its start in 2004 under the name of Ripple Pay. By 2011, they had changed their original peer-to-peer lending model and released this early promotional video. I will not play that video for you, but you can click the link and watch it yourself. So then there was a period of time called the Open Coin era, in which Ripple renamed Ripple Labs. The underlying Ripple protocol was developed by the Open Coin team. The XRP token launched in 2013, and some was given away to the members of the Bitcoin Talk forum. In 2015, Ripple Labs became just plain old Ripple. The controversy. Ripple's massive growth has not been without controversy. There have been a slew of lawsuits, criticism from the community, and competition from other coins, one of which was created by a founder of Ripple, Jed McCaleb, who has created the Stellar Lumens XLM token. So the legal issues. You may have heard about the many lawsuits involving Ripple, including one from the R3, one from the original founders, and beefs between Ripple and Stellar. From what I can tell, these seem to have been resolved, but please do your own research if you're considering investing in XRP, as this kind of legal action could materially impact the price of the XRP token. So regulatory concerns. In 2015, Ripple Labs was fined $700,000 for violating the Bank Secrecy Act. Ripple Labs were then required to register with FinCEN and identify people who were given XRP comply with AML, and have external audits to provide authorities with the necessary tools to track and analyze the flow of funds. So the technical concerns. Ripple has a feature called Balance Freeze, which is built into its gateways and was originally intended to help comply with the law enforcement. However, as you might expect, it was used for another purpose when an argument broke out between the company and a founder who had since left, namely Jed McCaleb. So their 2014 agreement, McCaleb's sales are limited to $10,000 per week during the first year, sales limited to $20,000 a week, second year, third, and fourth years, sales limited to 750 million XRP per year for the fifth and sixth years, sales limited to 1 billion for the seventh year, and limited to 2 billion after the seventh year. It was revised in 2016 when they kind of froze his assets. McCaleb must donate $2 billion XRP to charity. McCaleb must retain a title ownership of 5.3 billion XRP. However, Ripple will control the funds. And last point here, McCaleb and the charity will be able to collectively sell the following percentages of the average daily volume: 0.5% in the first year, 0.75% in years 2 and 3, 1% in the year 4, and 1.5% thereafter. So certainly they went back on their original agreement that they had with McCaleb. This technical concern here is that many people get into cryptocurrencies thinking that they have some sort of freedom and resistance from censorship. This is not the case with Ripple, which they can apply pressure for any reason they find expedient and cause funds to be frozen for reasons that may or may not have anything to do with law enforcement. So do they have a distributed consensus? I've said in the past that I'm not a fan of the practices of the BitMEX exchange, and I stand by that. But I also have to add that their blog is a different story. I have found quite a bit of interesting and well thought out there, such as the following. And this is a quote from the BitMEX blog. In January of 2018, the BitMEX research team installed and ran a copy of Ripple for the purpose of this report. The node operated by downloading a list of 5 public keys from the server v1.ripple.com. As the screenshot below shows, all 5 keys are assigned to ripple.com. The software indicates that 4 of the 5 keys are required to support a proposal in order for it to be accepted. Since the keys were all downloaded from the ripple.com server, Ripple is essentially in complete control of moving the ledger forward. So one could say that the system is centralized. Indeed, one of our nodes indicates that the key expire on February 1st of 2018, just a few days after the screenshot, implying that the software will need to visit ripple.com server again to download a new set of keys. They go on to say, of course, there is nothing wrong with being a centralized system, as most the overwhelming majority of electronic systems are centralized. Centralization makes systems easier to construct, more efficient, faster, cheaper to run, and more effective at stopping double spends and easier to integrate into other systems. However, some Ripple marketing, like the image below, contends that Ripple's system is distributed, which some may consider misleading. As you can see here, Ripple claims to be distributed open source technology built on the principles of a blockchain and growing set of validators. So this is true. The overwhelming majority of computer systems today are centralized, even if they are geographically redundant. There's nothing wrong with this. The only problem is trying to sell yourself with a distributed card when you're really running a centralized system. I find this disingenuous at best. So the concerns about RippleNet. On their website, Ripple lists Xcurrent, xRapid, and xVia as its 3 primary solutions or products. And you may be wondering, where is XRP in all of this? So Xcurrent is meant to provide real-time payments between banks, and I know they use it as a communication source between banks too. This does not require XRP. xRapid, which is set to launch in 1 month or so, is an on-demand liquidity pool for payment providers intended to free up tapped liquidity pools. They can use XRP, but it is not required, and that is important to take note of. xVia is used as a common interface for making global payments. They can also use XRP, but it's not by default. And that's, again, an important thing to keep in mind. So as you can see, investors should be cautious about the news regarding Ripple, because not everything Ripple does necessitates the use of the XRP token. And it's a very different cryptocurrency. Some have questioned the idea that without decentralization, without mining, and because Ripple is a corporation, Can we even call XRP a cryptocurrency? It seems to me that XRP is on the edge of this definition, being far removed from Bitcoin and Ethereum. However, that doesn't necessarily mean much from a traditional investing standpoint. After all, cryptocurrencies are new and changing rapidly, so we shouldn't necessarily assume this is good or bad. It is what it is. So the bull case for the Ripple company. All that being said, we do have to admit that Ripple has accomplished some amazing things. Consider the following. 1, they have been around for about 14 years in one form or another. This is ancient in cryptocurrency space. 2, they have received funding from very well-known firms such as Google Ventures, Andreessen Horowitz, and several others. 3, they have run trials with Western Union, MoneyGram, and have partnerships with over 120 banks. Ripple is best understood as a financial services company that happens to have a token. These tokens may be used as interbank settlements, and the Ripple network may also be used to facilitate these transactions without XRP. Use of the token XRP will drive demand, but if Ripple launches competing products or platforms, it could also provide positive externalities for XRP in the form of more named recognition, growth in the company, and integration of XRP in some way. So the transaction throughput, one of the main reasons for having a centralized system is to maximize transaction throughput. This is one of the chief selling points of XRP, which claims to be able to process 1,500 transactions per second. Recently, XRP and Ethereum have both been processing about 500 transactions per second per day, which puts them at twice as high as the number of daily Bitcoin transactions. Conclusion: the banking system may be running on legacy software, but it doesn't necessarily mean that blockchain is the solution. I have never worked as a banker, but from what I have learned and observed, the problems that we have in technical operations are mostly due to the fact that regulators move very slowly and technology is changing very quickly. And this makes sense because regulators have a challenging job of trying to protect the people that use the system, but not stifle it at the same time. A new protocol, such as the one Ripple is putting forth, has the potential to capitalize on these opportunities because there is a need for change in the space. And if someone can build a system that can be trusted, that's fast, and there's money on the table, well, the system that can be trusted and that's fast, and then there's money on the table already, and that is no doubt. However, the question is further complicated by the fact that the XRP token may or may not be a part of the solution. That's where a lot of the risk lies, in my opinion. Even though Ripple does run counter to many of the ideals that I resonate with in the Bitcoin community, I can't be blind to the fact that the powerful banks and financial institutions will not sit idly by and let this technology slip away. XRP has shown signs of life in a down market, especially as the network usage stats show, and I think it is a positive sign given the state of most other cryptocurrencies as I'm writing this in September of 2018. So proceed with caution. So this last article I have for you here: Walmart tells produce suppliers to use blockchain by next September. And Walmart plans to sell leafy greens that are tracked using blockchain technology within the next year. In a press release published Monday, the world's largest retailer, both by revenue and employees count, announced that it told suppliers from leafy green produce to integrate blockchain-based tracking system built in collaboration with IBM. According to the letter sent to suppliers, any company working with Walmart must work with the IBM Food Trust Network to create end-to-end traceability in 2 phases. The blockchain platform will make it easier for Walmart to source any food items quickly, with the release noting that tracing such items at present is an almost insurmountable challenge. The move comes in the wake of an E. coli outbreak that originated in Arizona earlier this year, while authorities at the CDC warned consumers to avoid lettuce grown near the city of Yuma. Walmart Vice President of the Food Safety, Frank, noted that it was difficult for consumers to confirm where exactly their produce was grown, and such the IBM blockchain will provide the transparency that consumers want. And congratulations to Walmart for making that happen next year. So that will wrap up this video. Again, if you guys enjoy it, hit the subscribe button, like it, share it, leave a comment, and I'll see you guys later.